Hey, Quant's just going to do a real quick rundown today of the markets. I don't have anything specific planned. I'm just going to go over the weekly strategy that I had been talking about in the past. That might be something I just continue to watch to see how it plays out. So just as a reminder, this is a strategy that will buy on Sunday morning at 9 a.m. I believe that's at my time, in my time zone, and then it's going to sell on Tuesday. And so we have this long that was open Sunday morning, even though we had some crazy market reaction on Friday, which liquidated a bunch of people. So I've heard and I've heard some people come on and say similar opinions to kind of what I had. I did not think it was that big of a deal. If you've been in crypto for a little while, 10 or 20% dump, even in a day, doesn't really seem like that much, but obviously the numbers have gotten bigger over time. And so 10 or 20% is still a lot of money. Not that it would have been any less percentage wise of your capital, depending on how you might have been trading. But I think with the numbers being larger now, a lot of people have become a little bit complacent or more comfortable, and probably rightfully so, considering all the regulation that's passed and the fact that we now have more institutional investors involved. And those markets have been continuing to ramp up. As a result, I think people just have gotten more comfortable with adding more money to the markets. And even with low leverage, a lot of people were getting liquidated. So that is not great, to say the least, but that is the game of trading. And so with this strategy, obviously we would have avoided all that, because this particular strategy is in the morning and out in the morning on Sunday, and then out on Tuesday. And so it doesn't really hold positions over the weekend. And considering all this ruckus happened on Friday, this particular strategy just happened to avoid that situation. So again, I have this set on the hourly time frame, just so that we get the entries and exits to fire on the hour when I want them specifically. But I'm going to go ahead and hide that and go back to the daily time frame. Looking at the master strategy, looking at the original support lines that I had in there, obviously they did not hold, I guess, support or resistance lines. So potentially they're going to be resistance now. On the master strategy, we do have a cross of the 821. This is one of the issues with trend following strategies in general that I have found, is that because they tend to be laggy or lagging, you can get chopped up in sideways markets. And this market has been essentially just going sideways since, I guess, about the 14th of July. So that's a few months of just sideways action, despite the fact that we've had some all-time highs come in. They just really haven't broke through and continued to progress. And so the fact that we're getting these all-time highs and slamming down is not great, but at the end of the day, we're still just range playing here. And so hopefully things will eventually break out to the upside, would be my my preference. But it's not, obviously they could go to the downside as well. Market will do what the market wants to do. But for my particular trend following strategy on the macro time frame, I'm looking at the 200s. And so we didn't even touch the 200s when we had that crazy Friday action. So in that context, things are still bullish. If I turn on the Gann swing indicator here, we did get I believe the last few times I was sharing this information, we had the 1 week and 1 day 2 bar were both green, but we didn't have a 1 day 1 bar as green yet. And so that's green right now. So things, despite all things that have happened, I would still argue things are bullish based on the systems that I follow and look at. And I think one thing that I would mention from an oscillator standpoint is it obviously, I'm just noting here that we had some bearish divergence that looks like it's played out already. But the point I wanted to mention here is that we've had the oscillators come down. And so in the context of a ranging market, I would call that a bullish reset, meaning that the oscillators are coming down while the price action is staying relatively constant or moving up. And so essentially just not dropping too far. And so if you think about it in the context of the oscillator represents some form of energy, and as you use up that energy, the asset is going to get tired, and those oscillators need to cool off so that they can generate more energy to push one way or the other. Of course, that might be a okay generalization, but they don't necessarily always play out that way. But I would say I would look at this as somewhat of a bullish reset. We have the oscillators coming down quite a bit on the MACD here. We still have the moving average setting close to zero. I think last time I made a video, I'd talk about that moving up over the zero as being bullish. Looks like it did move up over the zero line, but it's just barely sitting there. Wouldn't take much to get that to just really slope up and continue to charge forward. We have the stochastics coming down pretty far, and so potentially those could turn around and still have quite a bit of energy to move up. So not really guessing that's what's going to happen, just kind of pointing that out as an observation of one way that you can look at how these oscillators play out over time. And I think that will be it for today. Peace out, quants.